And now to today's big story. It's jobs all day. Let's get economist Anthony Chan back into the mix here. Anthony, we just heard Emily say the Fed fund futures market is pricing less of a rate cut. Is that the right move? Big jobs number today.
Oh, I have no doubt that it's the right move because this number is telling you that the economy is doing fine. What we don't know is the extent of how much further weakness we can see either in China and spill over into the United States. And that's why there's still some expectation that the Federal Reserve would be prepared to act if conditions were to deteriorate. And you certainly see that in the 10-year yield. Even after this great employment report, you would think the 10-year yield would pick up. But the bond market is telling you, wait, not so fast. We still have to be a little cautious.
Little trepidation there. I want to break this down by sectors in terms of how many jobs were added in certain sectors. We had warmer weather, and so that actually helped construction jobs. I guess no big surprise there. Also, healthcare, leisure and hospitality adding. Retail jobs down 8,300. Is that a seasonal thing?
Well, no, because it's not just seasonal, but we know that there was a little game with the calendar. Thanksgiving came in late, so all those things kind of played havoc with the seasonal factor. But there is a long-term trend in retail, and that is we're moving away from brick and mortar more towards online. So you're not going to see as much excitement in the retail component over time. There's going to be a slow, steady drip there as we transition. Not that it's a sign that the consumers are not buying, but that they're buying a little bit differently.
What's the real read on the U.S. economy? I think a lot of average investors awake this morning. They see a lot of people on Wall Street cutting their growth outlooks because of coronavirus, but then they see a report like this.
Well, because, again, this report does not reflect the effects of the coronavirus. But when you see next month's report, then and the one after that, then you will start to see the effects of the coronavirus. So it's like saying, I don't think anything happened because of coronavirus, but I don't have any statistics to show that. I just have a feeling.
What could February look like? Are we talking 150,000?
I think we can see even a number below 150,000. First of all, this number was very, very strong. By the way, a lot of momentum. Whenever you have upward revisions, and you had upward revisions in the prior 2 months, yes, we had the benchmark revision, but that wasn't a big surprise. The Labor Department had already told us that that number was going to be down a little over 500,000. The number now today came in just a little bit weaker, so that was not a big surprise.
Andy, let me ask you, so that doesn't signal to you that momentum is a little bit weak heading into 2020? The fact that those benchmark...
No, because that's so far back into the past history that it's certainly already incorporated in the market. And by the way, it's been corroborated by decent data. We got 2.3% growth. By the way, we don't have 3 or 4%. So we now are in a new world where 2% is a good number. I don't think you're going to get that in the first quarter. I don't even think you might see too much strength in the second quarter, even though the second quarter will be stronger than the first quarter.
What's that going to do to earnings, though?
I think earnings are positioned to be a little bit better than last year, but not a lot better than last year. I'm still worried about the consensus looking for 9 or 10% growth in earnings. I don't think that's going to happen, but I don't think that earnings are going to be as weak as last year. And the market, I think, is certainly reflecting that earnings in 2020 will be better than last year in 2019.
Anthony, we're really working you hard today. Next week, Fed Chair Jerome Powell will give his testimony. Anything in there that could spook the markets?
I don't think so, because I think Jerome Powell, and I used to be an economist at the Federal Reserve, has learned his lesson that if you scare the market, it's going to come with a price. So he's going to be super cautious, and I give him great kudos for that, and certainly not going to be in a position where there's so much uncertainty about the coronavirus to signal to the market that the Federal Reserve is ready to either raise rates or keep rates unchanged. I think he will give you a message that says we are watching the coronavirus, we're watching the economy, and we will act appropriately. And at this juncture, we are very happy with the status quo on policy. That's going to be his main message. I have no doubt.
All right, Anthony Chan, thanks so much. Always a pleasure to see you here on Jobs Day.
Hey, investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.